Guys, ChatGPT and AI is really making a lot of noise lately. I do believe that AI will be a big part of the future, just like the internet was back in 2000. If you think about it logically, a lot of issues that happen these days are from decision-making, personnel, etc. AI can help solve that. But remember, we're in the very, very, very early stages of AI. Artificial intelligence is such a young, and it's been growing for decades. There's been some sort of artificial intelligence for a long time, but it's getting more and more powerful. So what we want to do on this channel is, I've not looked at the answers yet. I wanted to ask AI, ChatGPT, one simple question. What stock should I invest in? Now, before we get to that though, I want to give some 500-foot views about things because you as a viewer might be on this channel to learn. And we tend to learn when we have fear about things. I have a lot of fear about the things I don't know. So what do? I go and learn. I read, I listen to books, I listen to podcasts, etc. in order to learn things that I don't understand, because at the end of the day, fear is just not understanding, right? Same thing happens with investing. 20 years ago, 15 years ago, more like 20 years ago, I was afraid of markets going down. It really crippled me. Oh my God, I'm gonna be poor, I'm gonna be this. And then I started to understand the fundamentals of buying equities. And I realized that when I buy a stock, I'm buying a piece of a business. And if I understand the fundamentals of the business and I'm able to pay a reasonable price, as long as I can deal with the ups and downs, that volatility, I'll probably be okay and I'll probably do pretty well overall. That really helped me a lot in terms of getting rid of my fear because I understood more. So when it comes to this, even if AI does a great job in terms of giving great returns, the hard part is one thing and one thing only. Still human behavior. Joel Greenblatt has a book called The Little Book That Beats the Market. And going back to like 1987, it has crushed the market. Not just beaten it, it's crushed. But he says in the book, if you can't trail the market for 3 to 5 years, you shouldn't do this. Because even these things that have 30 years of track record showing that it beats the market, people will still bail if it's not. We had a friend whose sister was in it, and she literally said 1 month into the Little Book That Beats the Market, this thing's not even beating the market, I'm out. 1 month in. And there was evidence to show that there were 3 to 4 year periods where it didn't beat the market. But over long periods of time, it crushed the market. So it's still human behavior that we have to contend with. AI is wonderful, but I don't think AI is going to solve the issue of investing, because successful investing is still about being successful in managing your emotions. That is the hardest part about investing. It's not the numbers, because at the end of the day, if you just dollar cost average and continuously do it, and even if markets fall 50, 60, 70%, you continue to do it or increase it, you're going to do very well. But if you can't do that, it doesn't matter what happens in this world. You're still not going to be able to do well, because the emotional part is stopping you from that success. So the question we're going to ask ChatGPT is, what stocks should I invest in? So here's the response, guys. Oh, it's going up. Wow, it's doing a lot here. Let's scroll to the top. As an AI language model, I can provide information and general guidance, but please note that I cannot provide personalized financial advice. Investing in stocks carries risks, and it's important to conduct thorough research or consult with a financial advisor before making any investment decisions. Agree with all of this. Hate this. It's a very generic response, a financial advisor. Guys, I would never, ever, ever talk to a financial advisor about buying individual stocks. Ever. Ever, 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 ever. And in case it wasn't clear, ever. They literally they're salespeople. And I'm okay with that. But it doesn't mean they're fine. I don't even talk to accountants about stocks. Because at the end of the day, you still have to have that emotional acumen and the ability to see long-term. And that's a human nature problem, not a job problem. Okay? Let's keep going. When considering the stocks to invest in, here are a few factors to keep in mind. Diversification. Okay, this might be true. Warren Buffett and Charlie Munger don't believe in diversification. I believe in it for the vast, vast majority of people, even for me. They have no problem. At one point, I think Warren Buffett had 63% of his money in one stock. I would never do that, me personally, unless that stock grew and grew and grew to such a big amount. But even then, I would look for opportunities to sell it and probably buy better valued stocks. It's generally recommended to build a diversified portfolio that includes stocks from different sectors. You know what I call this? SPY or VOO. Why even bother then? Just buy these two. Why even bother? If you're trying to get a diverse portfolio to match the market, just match the market. Very low cost. Fundamental analysis. Love this. Evaluate a company's financial health, including its revenue, earnings, debt levels, and competitive position. Look for companies with a strong track record, solid management, and sustainable business model. Okay, I like a lot of this. I don't disagree with any of this so far. On that point, market trends. Stay informed about the market trends and consider investing in sectors that show blah. I'm just going to go ahead and scratch that out. Now, with a certain level, I mean, I get it to a certain point. You know, the trends I like to look at is if a certain sector that I think is going to be around forever has been heavily beaten down for a long period of time. Like energy, like commodities or whatever it is. Like we currently believe we're going to be entering a commodities bull market. When the stocks go down, there'll be commodities that'll surge. Okay, maybe it happens, maybe it doesn't, because they've been beaten up so much in the last 3, 5, 10 years. So that's one way to do that. But in terms of market trends, that's not investing to me. Long-term perspective. Investing in stocks is generally considered a long-term endeavor. True. Instead of trying to time the market or chase short-term gains, focus on companies with solid long-term prospects and hold your investments for an extended period of time. Boop, boop. And that's what I don't, the market trends thing I think goes against this. Because look at AI. Is the future going to be AI? Is there going to be a lot in the yeah, sure. Okay, go jump on the NVIDIA bandwagon. I think that's a terrible idea. Look at marijuana. Look at crypto. Look at all these things that just Google the Google trends on them. They're terrible. So market trends only do so much. What I'd rather do is find companies that are selling for a good price and see, do they have the ability to stay around for a long period of time? That's it. I don't care if their market is still a market that's not going to grow like crazy. I'd rather have a great company that owns and controls their market. Let's keep going. Remember, the stock market can be unpredictable and past performance does not guarantee future results. That is true, does not guarantee it. But if you look at the overall market, if you look at our stock market to GDP indicator, it shows that over long periods of time, the same things end up happening in the long run. It's important to do your own research, except hire a financial advisor. Stay informed about market conditions. No. And consider seeking advice from a qualified financial professional. No. Who can provide personalized guidance based on your individual. Now, I do agree with this. If you have a financial advisor who's going to put you in low-cost ETFs and help guide you on what you need for retirement, all in favor of that. But if you're going to a financial advisor to pick individual stocks, you might as well just piss your money down the toilet. They're not going to have an understanding of it. You know how many times I've offered to have financial advisors come talk to me and we can record so we can sit there and talk about it? They're not going to do it. They won't do it. Why? Because they don't understand investing. They're salespeople. More power to them, but they're salespeople. They have models built that will tell you, hey, if you want to retire at this age and your income's this, here's what you should be doing. Because they need to justify their fee. So again, I go back to this. When it comes to AI and artificial intelligence, I think it can do a lot of things that are great, probably save a lot of time in the future for investing. At the end of the day, understanding these two major parts are going to be important for anybody to be successful investing. When you buy a stock, you're buying a piece of a business, and every investment is the present value of all future cash flows. And cash flow is basically the money left over at the day. When money comes in, money goes out to operate the business, what is left over? That's the only thing you can use to pay yourself back. If you can understand those two principles, then you're on a good start. But you still need to own yourself and your emotions of it. Because if you can't do that, it doesn't matter how brilliant of a numbers person you are, it's not going to matter. So if this made sense to you, 2 things I need you to do for me. Subscribe to the channel and share this with somebody else that you know who's really excited by AI and hopefully skipping steps in their investment decisions. Thank you for your time.